I'm immensely bullish on Solana. I think they have the right activity, the right pace of innovation. They're good, do good stuff. There is, so much activity on chain because of meme coins, but there's also stable coins and DeFi and all of the things that are required to build a great a blockchain ecosystem.
As of February 9th, 2025, Solana is trading at $198.73, reflecting a 2.39% increase from the previous close. After a recent downturn, Solana's price has reclaimed the $200 mark. Despite reaching an 18-month high in outflows, which suggests some investor caution, the price recovery indicates resilience in the market. Solana, the fifth largest cryptocurrency by market capitalization, looks stupidly bullish on long-term timeframes. Such forecast was shared by former hedge fund manager Raoul Pal, co-founder of Real Vision, a financial media company. On a logarithmic scale, Paul indicated the strongest resistance level that has suppressed the Solana rally for over 4 years. For Solana to skyrocket, it is absolutely necessary to hold above its November 2021 high of over $250. Currently, Solana is trading at $200.60 on major spot crypto exchanges. Its price surged by 1.6% in the last 24 hours. Also, despite its major wallet Phantom dropping the idea of launching a native token, the global Solana community is on the verge of massive Sonic and Jupiter airdrops. At the same time, critics recommend Solana holders to be aware of selling pressure coming. Solana supply is set to see large-scale token unlocks in Q1 2025. According to Raoul Pal, Solana is going to be one of the best trade for 2025. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
So I think Solana outperforms Bitcoin. Outperforms Bitcoin and outperforms ETH as well. ETH is struggling. And ETH is struggling not because ETH is bad. Yes, it's lost a bit of direction, but the reality is they overbuilt capacity by all of the layer twos. Right? Anybody can spin up a layer two, so you're building endless capacity, and it only uses a small amount on the actual Ethereum mainnet. So what they've built is this gigantic architecture that's suitable for the entire finance system at scale, but we don't have that use case. So what you're seeing is it's just not generating enough activity on the base chain, and that's why it's dragging. My guess is if you are Goldman Sachs or JP Morgan or whoever, and you want to tokenize assets, tokenize equity markets, tokenize all of the finance stuff, lending markets, you're going to do it on ETH.
Raoul Pal, CEO of Real Vision, expressed an optimistic outlook for the crypto market, predicting a banana zone liquidity surge that will drive prices higher. Paul foresees a liquidity surge in the market, which he believes will drive cryptocurrency prices higher. Paul emphasized that meme coins will dominate this cycle, allocating 10% of his portfolio to this sector. Paul specifically mentioned Dogecoin and a new entrant, Smoking Chickenfish. Despite recognizing the risks, Paul views the meme coin trend as a sign of the tokenization of culture and communities that could instigate larger developments in the crypto sector. Paul emphasized the need for risk management when investing in this volatile sector. In November 2024, Paul predicted that Bitcoin could reach $250,000, but also suggested that Ethereum could outperform under Donald Trump's administration. Paul's latest remarks indicate his continued confidence in the potential of cryptocurrencies despite recent market stagnation. Raoul Pal issued a stark warning about the rapidly approaching transformations in the global economy driven by unprecedented technological advancements. Paul claims that the coming years will bring about the largest changes humanity has ever experienced due to the rapid development of artificial intelligence and robotics. According to Paul, we are nearing what he terms the economic singularity, a point beyond which current economic, market, and business frameworks will no longer be applicable. Paul also shares, by about 2030, things are going to become not understandable by using the existing frameworks of economics, financial analysis, markets, and all that kind of stuff. Paul asserts that AI and robotics are advancing at a pace that will soon outstrip human capacity to adapt under current economic systems. Falling birth rates and aging populations across developed nations are leading to a decline in the traditional economic drivers of GDP growth.
What is coming is beyond what everybody on crypto Twitter is talking about. Right now it's like macros and Telegram chatbots. Telegram bots is what we're really building at scale. What is coming is self-thinking. But more important is this 2030 date. Now, it's not a fixed date. It could be 2032, could be whatever. Is, as you rightly said, well, what does that mean? And the answer is, and I spend my whole life looking into the future, the answer is we don't know.
Moreover, Paul notes that productivity has not kept up with the technological capability, and most new debt is simply servicing old debts, not creating new economic value. The most significant aspect of Paul's warning concerns the role of AI in the economy. He believes that AI will reach and surpass human levels of intelligence across all areas of knowledge, fundamentally altering the landscape of labor and productivity. Paul also states, AI is basically infinite human knowledge now. As these models scale, the breakthroughs come through, and the average IQ of AI goes from 100 to 400 and then on to 1,000,000 times the intelligence of a human. This immense growth in AI capabilities is expected to lead to as infinite productivity and a near-zero marginal cost of electricity, primarily due to advances in renewable energy technologies. Paul argues that these factors will lead to massive deflationary pressures as goods and services become increasingly inexpensive to produce.
Just buy crypto and tech. Make as much money as possible. And I'm here in Little Cayman, a small island of 140 people. Robots aren't coming here. There's nothing the tide comes in, the tide goes out. The sun goes up, sun goes down. Nothing matters. So nature is going to be the single most important thing you're going to have to focus on, because it'll be your way out. What is money? If you don't need it for anything, because everything is essentially free, what is economic growth, you rightly ask? I don't know. Now, outside of that, I think there is a role for humans, and we'll earn money. And this is another thing of what we're proving out in the crypto economy, in this high-velocity creative destruction cycle. Community is everything. Humans want to be around humans.
Paul is particularly bullish on the transformative power of blockchain technology and cryptocurrencies in this context. Paul describes a future economic model where AI agents perform tasks and transact autonomously using cryptocurrencies, given their ability to operate independently of traditional banking systems. Paul said, obviously, we will probably need crypto payments to pay you. I think we will use cryptocurrency to do that because last thing I checked, AI can't get a bank account. It's never going to transfer money over SWIFT. Never going to happen. Paul urges viewers to recognize the urgency of investing in cryptocurrencies. Paul advises that the window for capitalizing on these technologies is closing fast, with only about 6 years left to make substantial gains before traditional economic and market structures transform irreversibly. Paul says we are going to have to go through this together, and we have to be smart and try to figure it out as we go. But I do know that this idea of 6 years to make as much money as possible is really important. And I do think that the real answer to this, as far as I can see, is cryptocurrency, because it is the best performing asset in the world and of all time. So I think that's the one thing we can lean in. It has a huge future.